from our standpoint, we actually believe that we're setting up for a multi-year recovery in freight. When you think about just how much capacity has come out, and you guys have talked about this extensively, and I think you've been spot on. But like, just to put it in perspective, I mean, we think as much as 20 to 25% of the for-hire truckload market is likely to come out from a supply perspective, and that's not a trivial amount. So what we've seen year to date has absolutely been a supply-driven recovery. So I think it's really important to point out that even though we've seen improvements in the industrial sector year to date with the ISM in expansionary territory all year, we're still talking about what is still a subdued freight environment from a demand standpoint. This has been primarily supply-driven.
Well, I don't think there's anyone that disagrees on that. Yesterday, we had a really interesting conversation with Ken Adamo, formerly with DAT, now at East Logistics, and Jason Miller, a professor of supply chain at Michigan State. And they were making the case that they believe the cycle is going to be short-lived, or at least is going to roll over sometime in the next year, largely due to capacity expansion. I think Dr. Miller is making the case that drivers, fleets always overcorrect. I think Ken Adamo believes that the government's going to is going to ease some of the regulatory crackdowns due to pressure from the shipper community. But you're talking about something completely different. You're talking about the fact that it's going the opposite direction than what they're referring to. A 20 to 25% crackdown is a massive and substantial correction. Tell us a little bit why you think that's the case.
Our view is that recent government enforcement action is here to stay. And at the end of the day, the enforcement action is taken from the standpoint of improving the safety of our roads, decreasing theft on our roads, which we certainly support. So when we think about the actions that have occurred between non-domiciled CDLs, English language proficiency, the CDL mill crackdown, ELDs, everything from a cabotage standpoint, these have been ongoing for about 12 months now. And our view is that this is structural in nature, and it's the largest structural change to occur in the market since deregulation in 1980. I think we've seen, if you look at year to date, the fact that spot rates, depending on the week that you're talking about, are up anywhere between 30 and 50% year over year, despite muted demand, speaks to how much capacity has come out. And I think there is more capacity that will continue to come out on a go-forward or prospective basis. And then there will be a supply response at some point, to be clear. But we think it's going to be a rational supply response, not shadow capacity that's operating at unsustainable unit economics.